following is an update and technical analysis on Bitcoin, the largest component to the cryptography markets based upon the daily interval, as well as GBTC, the Grayscale Bitcoin Trust here, ETF based on, as well as the daily, where I like to rather look where they can provide valuable insights into the next trend, because GBTC acts as a proxy for institutional sentiment and liquidity within the Bitcoin markets, where the relationship between GBTC's market price and its net asset value could reflect institutional demand or lack thereof. And here we are, undercutting its 21-day moving average. We have a huge volume at price profile around that gap. Call it around the $60 handle range, and it is within the beginning stages of taking on, which we call it nice, clean, head and shoulder, classic looking formation of a head and shoulder top. Huge at profile volume price range around this key inflection point. As we undercut, back test the 21-day moving average, and here we are resorting to back testing it once again, slightly coming shy of tapping that key inflection point. And there are key additional setups and additional unfilled and unchecked gaps down below based upon this primary reactionary uptrend line with major reactionary lows really across that entire span of time. And I believe banging on the 7409, call it the 50% fibs retracement key inflection point, which would additionally come out as transitioning point of a neckline in case we were to flush, take that level out. I believe there's a ton of stops to go off, especially increasing the technical aspect of the price action, the validity of this stock on a complete divergent high. You have negative and bearish divergences constructed on all key technical momentum indicators. With additional volume drying up here, this could be the beginning stages of a downturn where it would apply additional pressure within MicroStrategy for some of the bearish pressures in the near term, where the market could be signaling an impending recalibration of its overextended narrative, rising regulatory scrutiny, or dwindling institutional enthusiasm. And most importantly, the macroeconomic headwinds that could create a confluence of downward forces on a retag and a revisit of this primary reactionary uptrend line, which would be good for an 18.4% crash at the downside, and the confluence of downward forces that could threaten to breach some of these key psychological support levels. Amid this near-term saga, Michael Saylor, once the harbinger of corporate Bitcoin adoption, could become the catalyst for a near-term sell-off should MicroStrategy offload even a fraction of its holdings to bolster liquidity or reposition its balance sheet. The move could unleash a cascade of price panic selling, where the scenario could shatter the market's perception of institutional faith, amplifying volatility, and ushering in a test of Bitcoin's resilience at levels not seen in months. You out to the spot price of Bitcoin, and there are some big key inflection points that are beginning to transcend across the entire price action, the technical aspect of this, and that is the exponential 100-day exponential moving average. And it has had a significant effect of transitioning price pivot points each and in time. It has been reflected upon. You know, whipsaw-like reaction, bounce, additional reactionary lows really across there, another additional whipsaw-like reaction, broke down. When you broke down, you had a complete 11 double-digit crash move to the downside. You had a backtest, major defense level here by the long traders, bull traders, once again, broke down, whipsaw-like reaction in the beginning stages of hugging this key inflection point, which became the median. And here we are on a similar note to the GBTC realm, on a nice balanced reflection of a classic neckline. Call it the 92,679 price support level, which would be the revisit for stops and or margin calls to go off, an additional forced selling, completing the ultimate price neckline breakdown and a flush of selling to the right side on a revisit of the 84,982 100 exponential moving average. And here are some of your key levels. And these are some big time key inflection points off the 1.618 fibs, which marked the top of the 108,211 price resistance level in confluence of a nice clean divergent high with jagged big time RSI divergence. You have an additional moving average convergence, divergence, and bearish divergences here within the price percent oscillator and the stochastics customized 1033 indicator. The odds are increasing of a breakdown solidified sell signal, not the most validated price support or price breakdown sell signal that I would have liked to get, but it is replaying within that key scenario. You had a whipsaw-like reaction. You backtested off this minor primary reactionary uptrend line, backtested it twice once again, and was rejected impulsively the second going time around here. And here we are dwindling among the big time price support level, call it the 93,000 K neckline to the head and shoulder classic looking top pivot point. And I believe a complete validated daily solid red infused candle breakdown below that inflection point on an issue in a daily sell signal within the technical realms of the outer layers of the intervals that usually overpower the near term, on a potential increase of odds to revisit the 100 exponential moving average price support level. If that level is taken out, I believe a double-digit crash of that magnitude will result in a stop loss to go off, considering how imperative and influential the 100 exponential moving average has been throughout this near-term span of time. Ultimately flushing down to the, what you would call the 1 Fibs retracement price support level at 72,856. And then ultimately, if things get real bad, we have an undershoot of that reaction, big time price support and or weekly price support level at the 64,832 range. And then ultimately a revisit of the 786 Fibs retracement, call it 60,613 price support level. And that will come in confluence with the 58K price support level in correlation of its big time primary uptrend line price support level. And that will be the reflection whether Bitcoin resides and undercuts into a much larger breakdown sell signal, influencing a heavily dragged down bear market for Bitcoin. And this is your ultimate price support level for any long-term investors and or long-term traders. Long-term investors, bull traders, and or heavily favored levered longs would need to defend this price support level really at all costs to avert additional damage within the key technical structure of this price action of Bitcoin. And that is what you would call in a near-term uptrend. Make no mistake about it. Whether the near-term and the bullish short sellers take the weight down in the price action of this security, make no mistake about it, we are in a near-term, longer-term uptrend line. Long traders, bull traders would need to rigorously defend these key reactionary highs and reactionary lows that have revisited upon the head and shoulder classic looking neckline here on a revisit, on a re-challenge to go on to retest and uphold, reflect, and defend this price support level really at all costs, called the 92,615 level, on a revisit to overcome this primary uptrend price resistance level to go on to re-challenge the 1.618 Fibs, call it the 108,211 price support level, to ultimately wing and complete counter-trend snapback whipsaw-like rally to challenge the negative and bearish divergences that are intact here. And make no mistake about it, long traders, bull traders, leveraged long traders want to burn those divergences out, ultimately negating them and reflecting on a wicked whipsaw-like reaction, false breakdown reaction on an all-out infused wicked rally, re-entering escape velocity.